Good afternoon, ladies and gentlemen. Welcome to Tuesday's Market SITREP here from beautiful Fort Lauderdale. Going to be out in Aspen this time next week. Really looking forward to the change of season, so to speak. About 78 degrees and beautiful and sunny out here, and I hear they're getting dumped on out in Aspen. So I'm looking forward to a spring break and getting my mind right. Let's go through the headlines. Investors embrace risk in emerging markets. Seems like the Wall Street Journal is about 3 to 4 months always behind Top Gun options, as we kind of do the Captain Kirk trade, we call it, boldly going where nobody is going right now, and looks like it's starting to be a crowded trade, folks, whether it was China couple months ago, or Brazil, which we've been trading for years with the EWZ. Traded it a long time. We traded it before the Olympics, but well, actually before that, before the World Cup, the Olympics, before the election of Bolsonaro, and it's been a great trade for us. The EWZ is up almost a full % today, bouncing right off the middle of the 50-day moving average, and that Keltner channel had a little bit of a pullback because Vale, one of the a big holding in the EWZ, and obviously the Bovespa, the Brazilian stock exchange. A lot of malfeasance. About 200 people died in a dam breakdown there. Turned out the executives knew the dam was faulty, and obviously the Gordon Gecko in them got the better of them, and the dam broke and killed a lot of people. So not good, but the EWZ is recovering nicely along with emerging markets. Today at 1 o'clock, we're going to cover our weekly options bear call spread on FXI. Now, big article in the journal saying, hey, emerging markets are looking great, including China, and that thing's popping up 1% today. So our weekly options trade that we looked at yesterday is looking at a pretty significant loss. But as we're going to review at 1 o'clock, if our commit criteria, why we still got into this trade, are still solid, then we hold on to it and we go through what I call kind of a lucky strike moment, right? You ever see a World War II movie where, a guy gets shot in the chest, calls for the medic, and the guy runs up to treat him, with a lucky strike. So we got to hang out in that trade. It's only Tuesday, and between now and Friday is a world of time in weekly options land. Again, we're kind of inching to a trade deal. It just keeps, every day. It seems like Larry Kudlow or Steve Mnuchin run out of adjectives to describe how great the negotiations are getting, and it really is starting to feel like it's going to be a little bit of a sell on the news. China came out today with economic growth of 6% to 6.5%. So he kind of gave his, state of the economy brief, and it was very, very interesting. It was the annual session of China's legislature on Tuesday, and wasn't super bullish, to be honest with you. And also what they're doing to stimulate their economy. Beijing is going to find it increasingly difficult to achieve its twin aims of doing what? Cutting debt and doing what? Printing money. So it's very, very dangerous. This is a very dangerous headline, folks, and one of the reasons I've gotten uber bearish on China. Once we get a trade deal behind us, remember, folks, any sort of trade deal is going to be bad for China. As President Trump has said, for decades they've been screwing the United States, and he compliments the Chinese leader by saying, hey, man, if I could have screwed you guys for decades, I would have. That's business, but those days are over with. So they're not. It's not going to, I get the president saying, hey, it's going to be a win-win for everybody. It isn't. And if you think that China's going to stop stealing technology or forcing the transfer of technology or stop subsidizing their businesses, you're wrong. But at least they're going to try to, and if they don't, obviously the chorus for people demanding that the president either keep tariffs in place or get ready to crank them back up, it's going to be bearish for their economy, folks. So I'd keep an eye on FXI, that it's most likely heading lower. So stocks right now kind of still muddying around. We're still sitting on our hands waiting to see what happens with trade. Remember, markets don't like unknown. They like certainty. And when things are uncertain, we just kind of chop sideways here. And we're still hanging right below this quadruple top on the S&P 500. So really the past week and this week is kind of the moment of truth here. The president is really stroking pretty hard for a trade signing agreement down here in Mar-a-Lago, right up the road, sometime in March. But I'm in the this is priced in camp. I get that with some certainty, CFOs and CEOs can run up to the whiteboard and start doing some more math and figure out earnings and all that type of stuff. But I don't know, man. This is this V rally, just markets don't do. Morgan Stanley yesterday coming out with a report saying, hey, man, this is a bear market rally, and we're selling it. A lot of institutions, folks, did not take part in this rally. A lot of the smart money sat this out. Well, how'd the market go up? Was buybacks. The number one buyer of the S&P 500 for the past couple months at these lows was who? The S&P 500. First of all, if you're a CEO that gets a bonus based on how your stock price is performing, when would you like to buy your stock back? When it's really, really cheap. A lot of folks, this was a lot of stock buybacks in here, folks. A lot of smart money did not jump into this. Good upgrade yesterday out of Amazon. We're going to take a look at a new Amazon trade in our 1 o'clock brief here shortly. Amazon's future growth profit rate pushes Evercore to raise the target to 1965. Folks, I think they're short. I think that's awful. I think the average consensus out about a year is 2,200. Let's just round up and say 2,200. I'm a $3,000 guy. I think this thing just keeps heading higher. Buybacks and ETFs are moving the market as investors shy away from single stocks. Kind of just brief you on that as well. ETFs are very, very popular now. Single stocks have what? Single stock risk. Breaking news: the CFO of company ABC is on the planes, on a plane in the Cayman with a suitcase full of all the company's money. Stocks down to zero. That can happen. If it's part of a basket of stocks in an ETF, might not happen. The problem, though, with folks is ETFs lack liquidity. Very wide bid-ask spreads, and also when everybody starts running towards the door to get out, there will be no liquidity to get out of an ETF. You won't find somebody to take your shares, or even in the options. So that's one of the reasons we have these massive volatile swings where ETFs and leveraged ETFs, the double, quadruple leveraged ETFs, right? Very, very dangerous. And that is going to be part of the next big one. Look, I'm glad I bailed out of CME a couple of weeks ago. CME was going to be a long-term bullish trade. Well, guess what? Down here in getting slammed. I told you to get bearish on this the other day. I would definitely get short-term bearish on CME. Looks like Miami wants to open their own exchange, and that's going to bring the total to 16. A lot of competition now in the exchange space, and also the SEC cracking down hard on them a little bit more and adding more fees. This just sucks, folks. The Democrats last week and this week just showed their hand, and what's going to happen for the next 2 years. Going to be an absolute shit show in the House of Representatives. The president, they are stroking as hard as they can. Looks like Mueller's going to be a dud. They're not going to find it. They haven't found any collusion. I've had dinner with Roger Stone. I have his signed book behind me. They got a couple indictments and convictions and dudes going to jail for being crappy dudes before the president was president. So now the collusion narrative's dead. They're going to go after and make up some shit. Remember, Lenin's chief information officer, whatever his title was, said, "Show me the man, I'll show you the crime." There is not one person, including me or anybody listening to my voice, that is without sin. You have broken the law numerous times in your life. You give me enough time, I'll show you the crime. And that's exactly what's going to happen to President Trump. It's going to be a shit show. We're going to be looking at gridlock. The market don't like gridlock. Everybody remembers what happened after the president got elected? Ain't going to do that if the impeachment's going on. So I like the volatility. I don't like it as an American. It's just, it's not good. It kind of breaks my heart a little bit. All right, folks, I got to go. Got to get ready for our 1 o'clock break. Have a great rest of your day. Happy hunting. Make sure you hedge, and God bless. I'll see you.